Hi there, guys. Welcome back to the Business Studies Guy. I'm quickly going to explain to you something that I received over an email. The person would like to stay anonymous, and the question that he had for me was what a credit score is and how it works and why it is important. Now, I will gladly explain that to you. A credit score, first of all, is the score or the rating that you get based on how well you manage your credit. If you don't pay back your credit like you are supposed to, you are going to have a bad credit rating. And obviously the opposite, if you pay back your loans and all your credit on a regular basis, that will give you a higher credit score. Why is it important? It's important if you want to apply for new credit. They take your credit score and then they use that as a guideline together with the prime interest rate that is determined by the government. Now, at the moment, I think the prime interest rate is at around about 9% at the moment. Now, that's just a guideline to indicate for banks where they can work from. If you've got a good credit score, chances are that you might get as close to a 9% interest rate as possible. But if you have a bad credit score, it is going to be, it can be even 4 or 5% higher than the prime interest rate. Now, the prime interest rate fluctuates. It can be lower sometimes, other times it can be higher. That changes basically on a yearly basis. But that is what they use it for. They use your credit score to determine what interest rate they are going to charge you. Before I get to how the whole process works, I just want to explain to you what an interest rate is and why it's important to get to understand that. When you go to buy something on credit, like furniture or a car or a house, for example, that specific product's got a price on it. And then based on your interest rate that they use your credit score for and then determined your interest rate, they add that interest to that original price. And then they work out your monthly installment. Now, your monthly installment can be over different periods of time. You can buy something and pay back over anything from 12 months up to 96 months, I recently learned. Now, 96 months is 8 years. That's a very long time. So, yes, common sense will tell you that the longer the period is, the lower the monthly installment will be. But remember, that will cause your interest to be even higher because you'll be paying off for much longer. So I would suggest that you rather take a shorter term and pay a slightly higher installment, but the interest will be lower then. When it comes to something like property, I know that you can get a period of much longer than 96 months, but that's simply because of the price on that property that you're buying. So yeah, don't see buying on credit as an easy thing to do. There's a big responsibility connected to buying on credit, but the opposite side is also that it can be a good thing. If you've got a good credit score and you do have stability, financial stability, then it is good to have one or two accounts to show future companies that you want to buy from on credit, that you do have a sense of responsibility and that you can be trusted when it comes to bigger amounts if you want to make a bigger loan. Also, if you want to start your own business, and hopefully you are going to do that and make a lot of money, When you go to the banks and apply for a loan to start your own business, then they can go back on your track record, your credit record, and see, listen, this person knows what he or she is talking about because they've had a good credit score over X amount of years, and then it will increase your chances of getting that loan. Rather start small with something like a clothing account, a cell phone account, a gym membership, something small that won't cost you an arm and a leg, and then work your way to a bigger loan for the future to come. I hope that you understand the credit score and how credit works at the moment. Yeah, let's stay positive out there and take good care of your finances. Thanks for watching. Goodbye.